Hey everyone, Michael Petrovich, Petrovich Team Home Loan. Today we're going to talk about how to get an FHA loan in Papillion, Nebraska. Papillion, my hometown, is where my mortgage company is located. So I want to go over some benefits of the FHA loan and what type of buyer usually fits in the FHA loan. So it is not a first-time homebuyer program. So a lot of people think it's a first-time homebuyer program, but anyone can take out an FHA loan. A lot of first-time homebuyers use it because the qualities of the FHA loan fit nicely with first-time homebuyers. And what do I mean by that? Well, FHA requires or allows a lot lower credit score than other loan programs. So the standard loan program, conventional, Fannie and Freddie, require a little bit higher score. And even in the lower scores, if you still qualify for the conventional, it does bump the rate up a bit, quite a bit on a conventional, whereas FHA will go with the lower score and it doesn't affect the interest rate as much on the FHA. So FHA technically will go down to 580. I recommend not doing an FHA loan unless you have a credit score of 620. Once you get below 620, it does affect the interest rate. It does affect the fees. So taking some time to get your scores, if you're at 600, getting that extra 20 points might not be that difficult. And getting there is going to save you thousands of dollars in fees and possibly hundreds of dollars a month in payment. So I usually tell people it's best to wait till you're at that 620 and try to help them get there. But they will go down to that 580 if needed. So that's always good with first-time home buyers that might not have as much of a credit history, so they're not showing as good credit scores. Another thing FHA will do is will lend on someone with a thin credit history. So if you are just establishing your credit, they will use non-traditional credit lines. So for example, they'll use monthly bills that don't appear on your credit reports, insurance, cell phone, utilities, rental history. So if you have a thin credit history, you can still qualify with FHA by providing what are called non-traditional trade lines. So that's something that conventional won't do, is non-traditional trade lines where FHA will. So if you're trying to buy your first house, haven't really established a lot of credit, FHA is a good option. Second is debt ratios. So we take your income, your gross monthly income, and we take the new house payment and any debts showing on your credit report, and that's how we establish your debt ratio. Now, conventional is going to stick to around, and it can fluctuate a bit based on credit score, but right around 35 and 45. So 35% of your gross income can be that house payment, and all of your debts, house payment and any consumer debts on your credit report, can only add up to 45% of your gross income. So if you're making $5,000 a month, I'm sorry, let's do 4,000. The highest we can go is a little math here, like 1,700 on all your debts. So FHA will go a bit higher. So they'll go into the 40% or above on your house payment and up to 56.99. So just below 57% on the total debt ratio. So obviously we don't want to put you in a position where you can't afford the house, but let's say you come in and maybe you have some income that we can't use, overtime income, maybe a second job that we can't use, or certain income you may get, but we can't use on the loan. And we're able to get you into that FHA loan with those higher debt ratios using your qualifying income. So kind of a way to get into a house. Maybe you're just, out of college, just starting to establish yourself in your career and your income's not quite where you want it to be or where it's going to be in a few years. Get that FHA loan now, and then we can come back later when you have that extra income and get you another program. Another thing is assets. So FHA has a lower down payment, 3.5%. And it also allows the seller to give credits on, not towards the down payment, but towards the closing costs and escrow. Conventional allows that also, but is usually more restrictive on how much the seller can give you. FHA will allow up to 6% of the purchase price. So if you're buying a $100,000 house, the seller can give you up to $6,000 in credits towards closing costs and escrow. And usually the 6% is more than enough to cover all the closing costs and all the escrow, so that you're only bringing in that down payment. FHA will also allow gift funds. So your parents, this is very common, parents, a close relative can gift you the money for closing costs, escrow, or down payment. So it's possible with an FHA loan to get into a home with no money out of your pocket. So it might be out of a gift from a relative and then a credit from the seller, but you can get in the house with no money out of your pocket on an FHA loan. Let's see here. So on FHA, scroll down here a bit. So, sorry. So another thing on FHA, here we go. FHA does allow a co-signer. So what that means is if you don't qualify due to debt ratios, That's usually the most common reason, is that your income's not enough to purchase a house. Someone can co-sign. So a parent can co-sign on the loan. They will go on the loan. They don't have to live in the house, and we can use their income, their assets, their credit to qualify for the FHA loan. Very common again. And what I'll do is I'll work with people to talk to the co-signer, let them know how that works, because they will actually be on the loan, so that will be on their credit, just like they own the house. But we'll put a plan in place to get them off the loan in the near future. So as soon as you're able to qualify for that house on your own, we'll go back and we'll remove that co-signer. And there's ways to do that. And I think every co-signer wants to know, how long am I going to be on this loan? What's our plan to get me off this loan? Because obviously you don't want to be on many co-signers kind of are hesitant to do that if they don't know that they're going to be able to get off that loan in the near future. So what are the advantages of the FHA? The advantage of an FHA is just everything we just talked about: higher debt ratios, lower assets needed, ability to have a co-signer. So you can see it's ideally suited for first-time home buyers, so not necessarily a first-time home buyer program, but it fits with people that are just starting out, may have less than perfect credit, don't have the assets, don't have the income to qualify for a house. They still have that opportunity to get in a house early, and later on down the road, we can get them out of the FHA loan and into a conventional program. Now that leads into the disadvantages of FHA. So FHA has great rates, but just like conventional, it has mortgage insurance if you're not putting down. Conventional has mortgage insurance if you don't put down 20%. FHA has mortgage insurance as well, but the FHA mortgage insurance never drops off. So whether you're putting down 20%, 50%, the 3.5%, it's going to have mortgage insurance, and it'll have it for the life of the loan. So that mortgage insurance does not help you as the buyer. It covers the lender against any sort of any loss on the FHA loan. So that's insurance for the lender, not for you. So that's something that we don't want to pay if we don't have to. So what we want to do is get you in that FHA loan, get you in the house, pay that loan down, build some equity in the house, improve your credit, improve your income, whatever we have to do. And then down the road, we'll refinance you into a conventional loan without that mortgage insurance. So anytime I do an FHA loan, we always want to put a plan in place to get you out of that FHA loan in the future. So whether that's getting a co-signer off the loan, getting from the FHA to the conventional, we want to put a plan in place, and I'll stay in touch with you to do that. Whether it takes a year, 2 years, 3 years, we'll stay in touch and make sure we do that as soon as we can. So the reason I talk about the FHA loan in Papillion is because one limit FHA does have is that they do not go as high on the loan amounts. It's restricted to just over $300,000, about $314,000 is the highest loan amount you can take out on an FHA. So if you're trying to buy a $400,000 house, you need a very large down payment to get down to that $314,000. Good news is that in Papillion, the average home price is right around $250,000. So just about every home in Papillion fits within that guideline for the FHA loan. So I just want to kind of go over that this loan program, there's some areas in town where it just won't fit because the home prices are too high. But in Papillion, the home prices are right in that median where FHA is usually an option for most people. So check out this article that I wrote on. I pretty much wrote about everything I talked about here. Reach out to me, send me a text, give me a call, submit your information on my website, and we'll be in touch and I can answer all your questions. All right, thanks.